So in the first class, we covered costing systems, variable versus absorption, and we discussed what is important about the various costing systems, and that the main difference is how you treat fixed manufacturing overheads. In the absorption costing system, fixed manufacturing overheads is added to the cost of a product, whereas in the variable costing system, fixed manufacturing overheads is not added to the cost of a product, but rather it is expensed immediately in the year it is incurred. Okay, so that's a big difference. So remember, with because under the absorption costing method, you are adding fixed manufacturing overheads to the cost of a product. That means the fixed manufacturing overheads is only expensed in the year the product is sold. Whereas in the variable costing system, because fixed manufacturing overheads is not added to the cost of a product, it is expensed in the year it is incurred. Okay, so that's very important, because remember, the cost of a product, it means it's inventory. Inventory is an asset. Inventory is only expensed as cost of sales through the income statement when the inventory is sold. Okay, so that is an important aspect. So like there's many companies that play around with their profit by just increasing closing inventory. So what do? They increase closing inventory. So it reduces cost of sales. Okay, so that is something that we call it creative accounting. So where people artificially increase their profit by playing around with closing inventory. So if and as a result, a lot of fixed costs can be added to the closing inventory and also reduce costs. Okay, so just be aware of those type of stuff. So in management accounting, they will ask you for what's the big difference, and the big difference is the treatment of fixed costs, fixed manufacturing overheads or fixed manufacturing costs. And what is the big difference is the fact that fixed manufacturing costs gets added to the cost of a product under the absorption, whereas fixed manufacturing costs or fixed manufacturing overheads is expensed immediately in the year it is incurred for the variable costing system. Okay, so we went through that with the difference between variable and absorption costing system. We also explained, and then we went through the cost of a product, and then we also explained how to set up the income statement if you're using variable or if you're using absorption costing. Then we also discussed traditional versus ABC. Okay, in class 2, we did ABC, activity-based costing. Now we said that what is ABC, what is traditional costing? We said that you must differentiate, you must distinguish between a costing system and ABC and traditional. Remember, the costing system is just dealing with absorption variable and what is included in the cost of a product. So absorption and variable costing is mainly got to do with what gets included in the cost of a product. So under variable, what gets included? Direct material, direct labor, and variable manufacturing overheads. Under absorption, what gets included? Direct material, direct labor, variable manufacturing overheads, as well as fixed manufacturing overheads. Okay, so that is what the costing system is about. What gets included in the cost of a product. Whereas ABC and traditional cost, ABC, activity-based costing, and traditional costing is all about how do you allocate fixed manufacturing overheads. So it's very important to understand the difference between the two. So the costing systems is all about what gets included in the cost of a product. ABC and traditional costing is all about how do you allocate fixed manufacturing overheads. Now remember, fixed manufacturing overheads only comes into play for absorption costing method. So therefore, under the absorption costing method, you can have absorption costing method. So you have two types of methods: absorption costing method, where fixed overheads is allocated according to the traditional costing method. That's the first one. The second one is absorption costing method, where fixed overheads is allocated using ABC. Okay, so it's very important to understand that this filters throughout management accounting. So make sure you have a good grips on this. Then in class 2, we dealt with ABC, how to set up the ABC calculation, and that you need to identify the activities, you need to identify the cost driver. Once you have the activities and the cost driver, you'll be able to work out cost per driver. Then you allocate for each product. And then we made it clear that it's very important to identify what the question is asking. Is it asking you for total overheads, total fixed overheads according to ABC? Or is it asking you for overheads per product? I mean, is it asking you for overheads per unit using ABC? So remember, if it's total, you just stop at the total. If it's per unit, you need to divide by the number of units. Okay, so that's the one important thing to pick up. Whether they're asking you for total overheads per product using ABC, or whether they're asking you overheads per product per unit. There's a big difference. In the one, you don't divide by the number of units. In the second, you do divide by the number of units. The third thing also to be very clear on is to identify if they're asking you only for the overheads or if they're asking you for the cost of a product. Because remember, ABC deals only with the allocation of fixed overheads, whereas the cost of a product includes direct material, direct labor, variable overheads, and fixed overheads. So just be clear that you identify whether they're only asking you for overheads or whether they're asking you for the cost of a product using ABC. So that means you must not forget to add direct material. You must not forget to add direct labor. You must not forget to add variable manufacturing overheads. So it's very important to identify what is being asked. So that is a quick recap on the first two lessons. Now we're going to go into lesson number 3, joint and buy products. So what is the whole purpose of joint and buy products? The big question, that we need to answer is basically, how do we allocate joint costs to a joint product? How do we allocate joint costs to joint products? Now, I'm just going to give you a quick explanation, and then I'm going to do a quick drawing. Like, it's not really a drawing, but yeah, we'll try our best to draw it, and then so you can see what we're trying to achieve. So what happens with joint costs, joint products, and so forth? You will have a process that starts, okay? So you're starting a process, and at the beginning of the process, you'll be adding certain items. You'll be adding direct material. You may be adding, there may be labor costs. There may be overhead costs. Okay, so you're adding all the costs. So it's going into all this material, all the overheads, and all the labor costs is going into one process. Just give me a minute, take my son quickly away. Okay, I'm back. So what we were saying is, during a process, what would happen is you'd add direct material, direct labor, and you'd incur overhead costs. So that goes all into one process. Then at a certain point, we call this the split-off point, more than one product comes out. For our purposes, it's typically going to be 3 products. Okay, so 3 products come out. 2 of the products will be a joint product, and 1 product will be a byproduct. Okay, we'll go into the details in terms of what is a joint product, what is a byproduct. So the question is, in one process, we incurred direct material, direct labor, and overhead costs, and that is known as our joint costs, but 3 products came out. How do we allocate those costs to the 3 products. So that is basically the question we need to answer, and we need to come up with a method of allocating the costs. So that's basically what is happening. So I'm just going to switch over into the whiteboard, and then I'm going to try and draw it so we can see what we're trying to achieve. Okay, so you should be able to see the whiteboard. So basically what is happening, so let's just assume that there is a start of the product, and I mean start of the process, and this is the process. So what happens over here? We incur direct labor, we incur direct material, and we incur, what's the other one? We incur overhead costs. Okay, so we incur overheads. Okay, then at this point, 3 products come out. Okay, so we have 3 products that comes out. Now, what's important to know, this section over here, that section is known as the joint process. Okay, so this is known as the joint process. Okay, so from the start, so this over here is the start of the process, up until where the 3 products come out. That whole process from the start up until where the 3 products come out, that is known as the joint process. These costs that we incurred within the joint process is known as the joint costs. Okay, that's known as the joint costs. So the start of the process up until where the 3 products come out, that whole process is known as the joint process. The cost incurred in the joint process is known as the joint costs. Okay, so that's important. The point, this point over here, what's happening now? What just happened to my pen? I don't know what happened to my pen. Okay, so this point over here, oh, I don't know what they are doing. I don't have a vanishing pen. I'm assuming this is the pen. And I just had the pen not too long ago. Anyway, so this point over here, I don't know what is happening. Okay, so this, I don't know what's happening here now. Don't want that. Let's just throw with this anyway. So this over here, so this point over here, let me just delete this. So at this point over here, where the 3 stuff is coming out, that is known as the split off point. It's very important because they will use this in a scenario. So you must know at what point they're referring to. So the point where the 3 products come out, this place is known as the split off point. Okay. So in our case, this will be 3 products, product 1, product 2, and then product 3. Now, the joint costs that we incurred over here, we will need to allocate to these 3 products. Now, the important aspect is the joint costs is only allocated to the joint products, okay? The joint costs is only allocated to the joint products. So we'll have to identify which are the joint products and which is the byproduct. So what would happen? Three things will be, you have three products. Of the three products, two products will be joint products, and the one product will be a byproduct. So how do you know which is which? Sometimes they're going to tell you, sometimes you're going to have to figure it out. So how do you figure it out? So the joint products is generally going to be the ones with the big values, and the byproduct is the small value item. So anything that is a small value item, that will be the byproduct. Anything that is the big value items, that will be a joint product. So let's just give you a simple example. So let's give you a simple example. We'll give you two examples, right? One that is a proper joint process, and then one that is not really a joint process, but the concept of joint process can be applied. So here we have the starting process. Okay, so what would happen? Let's take Levi's, for example. Okay, so what would happen? They can put in one sheet of denim in this process. Okay, so in this process, one sheet of denim goes in, and then it goes through the cutting process and all of those type of stuff. Then we're just making up examples. So what would happen? Out of this process, what comes is one jeans, one denim jacket, so one denim jeans, one denim jacket, and then with the leftovers, they will make denim wallets, denim purses, whatever it is. Now, a jeans goes for 800, a jacket goes for 1.2, and then a wallet 50 Rand. As you can see, the value between all of these is very, very different, right? So 1.2 and 900, whatever I said, those are high value compared to the 50 Rand, which is a low value. So the 50 Rand would be considered the byproduct, and then the joint products is going to be the jeans and the denim jacket. So that is basically how it works. So then the joint costs will be allocated to the two joint products, the jeans and the wallet and the denim jacket. Another more realistic example that happens is in a dairy company, right? So what happened with a dairy company? At the start of the process, they would have, they'll put in fresh milk. At the start of the process, they will put in fresh milk, okay? And whatever else they'll put in here, and then it goes through the joint process. Then at some point, three products come out. Product number one is cheese. Product number two is butter. Product number three is fresh cream. They just make it up, okay? So the butter is, let's say, 500 Rand per kilogram, whatever it is, okay? The cheese, 600 Rand per kilogram. But the fresh cream, it is 50 Rand per kilogram. So then the fresh cream would be a low value relative to these two items. So the fresh cream would be the byproduct, and the joint products would be butter and cheese. Okay, so that's important to understand. So that means the joint costs would be allocated to the two joint products. Okay, so that's important to be able to pick up. Now remember, this is the split off point. So it's important to understand the split off point. The question now is, how do we allocate the joint costs to these two joint products? Okay, so that is basically the question. Before we get there, I cannot get my pen. How did I have that pen just now? I'm not sure how to get the pen. Okay, anyway. So what would happen is, they just draw something. So after the split off point, there may be a situation where we want to incur further costs. Okay, so any cost incurred after the split off point is known as further costs. Okay, so they'll call it further costs. So any cost incurred after the split off point is known as further costs. Okay, further processing costs. Okay, so the cost incurred after the split off point is known as further processing costs. Now remember, joint costs is relates to all the products. So that's why we need a method of allocating them. The further processing cost will be specific to a particular item. So you can specifically determine the further processing cost for the butter, You can specifically determine the further processing cost for the cheese. You can specifically determine the further processing cost for the fresh cream. Okay, so you might just be aware of that, that you can also have further processing costs. So just understand that. So the question is, how can we allocate? Okay, so there are 4 methods to allocate. Method number in no particular order, but basically method number 1. So remember, the whole point is, how do we allocate at the split off point? Even if we have further processing costs, how do we allocate the joint costs at the split off point? Okay, so that's important to understand. So I'm just going to call it number 1, but it's no particular order. So method number 1 is units measurement. Okay, the units measurement, whatever it's called. Okay, physical measure, yeah, that's what it's called. Physical units measurement, something like that. Second one, we will call it market value at split off point. Okay, so it's very important to know where the split off point is. Market value at split off point. Number 3, it is NAV, net asset value method. And then number 4 is constant GP. Okay, so those are the 4 methods available. Now, you can't use any method anytime. There's certain instances that will allow you to, there are certain instances that will allow you to, so you must know what factors will determine which method you can use. So let's go through it. For the physical units measurement, when can you use the physical units measurement? You can use the physical units measurement if the joint products have the same units measurement. Okay, so for example, they are both kilograms, they are both liters, they are both meters. So if they're both in the same, if they're both measured in the same units, then you can use physical measurement, the physical units measurement. But if the one is kilograms and the other one is liters, then you can't. Okay, so that is a how you know when you can use physical units measurement. Okay, the market value at split off point. You can use the market value at split off point if the joint products can be sold to an external market at split off point. So you must read the scenario carefully to determine whether there is a market available for the product as is at split off point. If there is a market available at split off point for the product as is, that means there will be a market selling price. So then we will be able to split based on selling price. Okay, so that's very important. Then we have the net asset value method. The net asset value method is saying the following. So the net asset value method is saying we don't have a market value at split off point. Okay, we don't, or we may not have a market value of split off point, but we do have a market value. We do have a market value after further processing costs. Okay, so the net asset value method is saying we have a market value after further processing costs. Okay, but remember, we don't want to split joint costs at this point. We want to split joint costs at that point. So the net asset value is saying take market value after further processing costs, subtract the further processing costs, because you will have it. That in theory must tell you what the value at split off point must be. So net asset value is saying market value after further processing costs minus further processing costs will give you a theoretical value at split off point. Okay, so that is basically the net asset value method. So they love this method because it's a little bit more challenging, and this one is the most common. Okay, so they love this method because it's more challenging, but in a less challenging question, physical units is the common one. And in the constant GP, just saying you must split the joint costs so that the gross profit is constant. So, for example, the company could say cheese has a gross profit. They want cheese to have a gross profit of 20%. They want what was the other one I had? Butter to have a gross profit of 30%. So you must split the joint costs so that the GP of cheese equals 20%, so that the GP of butter equals 30%. Remember, how do you get gross profit? Gross profit is gross profit equals sales minus cost of sales. Gross profit percentage equals gross profit divided by sales. Okay, so that is basically, this hardly comes up, but you might just know about it. Not saying it won't come up, but it hardly comes up. So the constant GP, that is when they tell you the company has a constant GP for each product. So when you do the split, you have to make sure that after the split, the GP is still the same. Net asset value, the more challenging one, because why is it more challenging? Because intuitively it doesn't make sense in our head. But if you can see this, net asset value is saying we're taking the market value. Market value just means the selling price in the external market. So what you can sell the product for after further processing, subtract further processing to get a theoretical value at split off point. Because remember, we need a value at split off point because we need to allocate costs at split off point. Okay, so that's net asset value. Market value at split off point would be market value at split off point would be if you can sell the product as is into in an external market, then that means there is a price for it, so you can use that. Physical units measurement, if the products have the same units, all kilograms, all liters, all meters, whatever it is. Okay. In some questions, three of them can be applicable. So then you must have a look at what the company policy is. Okay. So some questions of all three, physical, market value, and net asset value can be used. So then you can choose. The question will tell you which one to use based on company policy. Okay. Another type of question on this is, you have a selling price at this point, meaning you have a market value at split off point, but you can also do further processing and then you can sell at this point. So the typical question on that question would be, what should the company do? Should they sell at this point, or should they incur further processing costs and sell at this point? So what you just do is you work out what is the profit if they sell at this point, what is the profit if they sell at that point, and whichever profit is the highest, that one you recommend. Okay, so that is basically joint and byproducts. Is there any question that you have before we jump into a scenario?
All good, Faiz. All good.
Okay, so
all good.
Okay, Michaela.
No questions.
Okay, so let's now I'm going to stop this and we're going to go into the scenario. Okay, so the scenario is on the drive. This is question 2, May, June 2018. We're just going to quickly read through the scenario, but we're going to focus mainly on not this division, on the other division. Okay, so we're going to read quickly through the scenario, and then we're going to focus on the particular division where we're going to answer the question. So there is no real question in this question on it. So I'm going to just, so there's no specific joint and byproduct question. The joint and byproducts is basically part of another question that you are required to answer. So if you have a look over here, you can see joint and byproducts is mentioned in the as a topic within question 2. But if you go to the required of question 2, there's no question that specifically asks you for the joint to work out the joint costs. However, within part B, I think I just quickly scanned it. I think within part B or within one of the two questions, either yeah, I think it was this one. So part E or part B, you are required to get to the answer. You need the joint costs. To get to the answer, you need the joint costs. But if you look at the scenario, the joint costs are not given. So as you can see, there's not a specific question to tell you to calculate joint costs, but to get another answer, one of the requireds, you need the joint costs, and joint costs are not given. So we're just going to do this calculation to work out what the joint cost should be. As you can see, sales less cost of sales. What is cost of sales made up of? Joint costs, further processing, and then the refrigerating costs. So there's nothing for the joint costs. We will have to work that out. So there's no specific required, but it is part of a bigger question somewhere within question 2. So all we're going to focus on in this lesson is to work out this split. Okay, and it's coming from the Avatar division. Okay, so we're not going to read everything. We're just going to read the the background of the company. Then we're going to jump straight into part number 2 to answer the rest. Okay, we're not going to do part 3 because it's completely separate, so there's nothing needed over there. Okay, so that's what we're going to do. I'll just point out something important in point number 1 that we need for our scenario. So just I just want to get me a tissue quickly. While I get me a tissue, just if you can read the background up until point number 1. Okay, so remember, when it comes to joint products, try to picture the process through your brain. Okay, like try to visualize. Let there be a picture happening. So, like even though it is every scenario will be different because it's a different product, but just choose one product that makes sense to you. Like for me, I can picture a denim going through a process, being cut, and one jeans come out, one jacket come out, and then with the leftover material, they make wallets. Okay, so just something like that. Okay, so obviously it's much on a bigger scale, but just keep it small for just to picture what's happening. So that will give you some perspective as to what you are trying to calculate. Similarly, with the dairy scenario, picture a big bowl and they simply raw milk, whatever, if I can call it raw. Okay, so raw milk going into the process, and then when the process is done, what comes out? They have some cheese, they have some butter, and then they have fresh cream. Okay, so just picture that happening, and so that you can have some perspective of what you're trying to do. You will never ever believe what a big difference happens when you try to place yourself in the shoes of management, in the shoes of the company, and see the business actually happening, and then asking yourself, okay, what is the management accounting principles that I need to apply? As opposed to blocking off your mind and only trying to think in terms of management accounting calculations, management accounting stuff. If you look at it from a business perspective, you see a bigger picture, and then you ask yourself, what are the management accounting principles and calculations that would apply over here? It will become a lot more easier. So management accounting is a little bit challenging when you think like an accountant. But if you think like a businessman, it becomes a lot more easier to understand. So try to take away the blinkers, take away our narrow thinking, and don't get absorbed in the management accounting. Try to see the bigger picture. Try to see a business happening, a process happening, and then think back and say, okay, what topic is relevant and what principles are we needing to apply? Then you will try, you will kind of get, it's not going to happen overnight, but that's where you're going to try to get a, we management accounting will be a little bit more easier. I can tell you when I was in CTA, management accounting so I enjoyed math. So math is basically management accounting and finance, meaning MAC3701 and MAC3702. Now I enjoyed MAC3702. I'm just calling it MAC3702. I'm meaning the finance part, although I wasn't that good at it, right? So in CTA, math, as we call it, was one of the subjects that almost made me fail. I like literally got 50% on the dot, meaning they probably pushed me over. That's how I see it. But I loved financial management. Management accounting, I wasn't really a fan of, so I couldn't make sense of it. But just before the exams, I knew I was on borderline not passing it. Just before the exams, the final exams, when I was in CTA, I did at UCT, so I went to a UCT library, and for 2 days, I like literally from 8 till 5, I spent 2 days going through 200 mark questions. It's a topic called strategic management, right? So within strategic management, what they do basically, they ask you, this basically the required is as follows. Please comment on the profitability of the company. That's the required. Comment on the profitability of the company. And if you look at the side of the number of marks, 100 marks. 100 marks, one line question, comment on the profitability of the company. Now there was, and it's not from a financial ratios point of view, it's from a management accounting point of view. And the first day, I took the one question and I basically studied it to see how they were thinking. And what made me click, I was just lucky enough to have clicked, management accounting clicked at that point in time. What the scenario that was given was a, like an ADT or something like that. I don't know even if ADT is, if you know ADT, the security company, those armed response guys, right? So when I read the scenario and when I read the solution, I couldn't get, so when I answered it, I was completely off. So I studied their solution. Then I tried to understand why they are saying what they are saying. And what I did was, and it was the first time I actually did it, is I just basically, when I read the scenario and I read the answer, then I tried to make sense, and I could picture what they were saying. I could picture ADT, the vehicles riding in the area. Then they said if the area had a lot of subscribers, then there would be more vehicles in that area. So I could picture in Rondebosch here in Cape Town, ADT is there, right? So ADT rides up and down in Rondebosch. On certain parts of the road, they have actually a guard, Wendy house type thing, where a guard sits there. But in another area, where ADT is not so big, you have ADT, but it's not a lot of houses have it. You hardly see an ADT car. Okay, so I could picture that depending on the number of houses subscribed, that's the number of vehicles that's driving around there. Then they spoke about the number of guards in each car. They spoke about how often they drive around, so that plays around on the fuel price, that plays on the fuel they incur, this and all of those kind of stuff. And then I could understand that with ADT, they have armed response, they have security, they have different products, not just the armed response, they have other security cameras, this, that, and it was all within the scenario. And when I read the solution and the answer they gave, I could then make sense, because now I'm reading a security company, but as I'm reading the security company, I'm picturing ADT in my mind, that I could relate to ADT. And that at that moment, everything just clicked. So when I did the second question the next day, I almost got 100% if I marked myself, because when I answered the second question, the thought process that went through my mind was the ADT thought process. And then when I answered this specific question, which had nothing to do with ADT, nothing to do with armed response, it was the fact that I could relate. I could now think from a business perspective, and now I'm saying, oh, now I know from a business perspective, and now I applied the accounting, the management accounting principles. If it wasn't, like I tell myself, if it wasn't for that click, it was literally in the exam period, I don't think I'd have made MAC. So there's something similar over here. MAC is generally hard, and you will see if you take the non-nerds, right? So we're not talking about the super smart. The super smart can answer anything. Take the non-nerds. The students that really did well in management accounting was those that had business experience. Somehow their uncle was a businessman, or their dad, or someone, so they could relate to the shop their dad had, whatever it was, and it made so much. Or some of the students were in business themselves, and they could relate to the actual cost of business and all of those type of things. So it made sense for them. So for us that don't have that, if you do have that, then try to make use of that. But if you don't, then just try to picture a company that you can relate to. So like that, what triggered me was I read a security company, and I could picture ADT. And when I looked at the scenario and I looked at the solution, I could see it in my head, ADT driving around, the number of people, the one guard in the car. I could see the security cameras, the armed response, all of those, and then the solution made sense. So I just replicated that into the next scenario. So same thing, choose a company that you know, Pick n Pay, Woolworths, Truworths, whatever it is, and then try to make sense of it. So same thing with joint and byproducts. It can be, so some people find it confusing, but the moment you can picture the process in your head, you will see that joint and byproduct is super easy, and you can really do well. Okay, so my message to you is, try to think beyond just thinking as a management accountant. Don't limit yourself. Don't think in the box of a management accountant. See the business, and then ask yourself, how do we apply management accounting to this? It will be a lot more intuitive. Okay. So let's have a look at what this company is saying. Okay, so this is MFB is a beef producing group of companies with a centralized head office and 2 divisions that are managed by independent management teams. Okay, so just to, this is obviously an exam scenario. So when you see divisions and independent, okay, when you see the word divisions, when you see the word independent, or when you see decentralized, here they said centralized, but only the head office is centralized. When you have divisions, it means the company runs a decentralized business model. So it means each division runs on its own, and generally head office will be a centralized function. So when you see decentralization, when you see independent management teams, when you see divisions, so divisions means decentralization. When you see independent management teams, two things must trigger: transfer pricing and performance management. Okay, so when you see that, those are triggers for the management accounting concepts of transfer pricing and or performance management. Okay, it's not applicable to us tonight, but it is applicable in the rest of the question. Okay, so the two independent divisions is feedlot division and the abattoir division. Okay, so you know there are two divisions: feedlot, abattoir, and don't forget the head office, the centralized head office. So basically, the picture you must see in your head is MFB, the company. Below MFB is 3 lines, which is Division 1, feedlot, Division 2, abattoir, and head office. Okay, so that is what you must see. So on a piece of paper, or on this paper, you want to draw MFB as the company and 3 lines below MFB, which is the two divisions, and what was the other one? And the head office. Okay, so just remember, when you see independent management teams, when you see divisions, just let what must go, what your brain needs to trigger automatically is that there's a potential transfer pricing and or potential performance management. Okay. Okay, so we did that. MFB's current intergroup, there we go. Okay, MFB's current intergroup transfer price policy is to use a negotiated price. Okay, so we don't want negotiated pricing. Okay, but we're going to deal with transfer pricing. So I'm not going to explain the details. The group's entire operation takes place at its 330-hectare farm, situated a few kilometers outside of Bloemfontein. Okay, feedlot purchase cattle from the auction barns only. These auction barns are registered with both the Department of Agriculture, Forestry and Fisheries and the Agricultural Product Agency. Okay, the abattoir division purchase cattle from feedlots and slaughter them for sale to all major retailers across the Free State and the Northern Cape provinces. Okay, so now you can see feedlot supplies abattoir with cattle, and then the cattle is slaughtered by abattoir division and then sold to retailers. So because abattoir buys from feedlot, or put another way, feedlot sells to abattoir, there is obviously a transfer pricing happening. So we're probably going to have to deal with a transfer pricing issue. And the fact that they use a negotiated price is probably going to be a problem between the two divisions. Okay. Then they say the head office is fully responsible for the arrangement of the entire group's long-term financing. Okay, that's very, very important. This is an impact on performance management, but we will use the same question for transfer pricing and performance management. We just see this performance management quickly. Just going to check quickly. Yeah, okay, there's performance management, transfer pricing. Okay, so we will use the same question for performance management and transfer pricing. So this sentence over here will play a significant role in performance management. Okay, they say unless specifically mentioned, all procurement, operational, working capital management, cash management, and short-term funding decisions of any division are solely made by the management team of that respective division. Okay, so this whole paragraph over here plays a significant role in performance management, but I'll explain that when we get there. Okay, MFB makes use of the absorption costing system. Whenever you see that, what must go through your head? When you read absorption costing system, what must go through your head? That the cost of a product is made up of direct material, direct labor, variable manufacturing overheads, and fixed manufacturing overheads. While all its inventory are valid using first in, first out, the company has a 31 May financial year end. Okay, so we saw that. So I'm going to skip the whole thing. The only thing that may be relevant over here is the following. Okay, so the only thing that may be relevant for what we want to do is 1.2. So they say so let's just read quickly 1.1. On 1, so this is the actual information for the month ended 31 May 2018. So on 1 May 2018, the price of the Class B cattle at the auction barn was 20 Rand per kg. On this day, the total number of cattle purchased by the division was equivalent to the division's current level of operating capacity. On the last day of the month, the division sold the cattle it had bought on 1 May 2018. The selling price to the external market was 35 Rand per kg. The internal transfer price to the abattoir division was negotiated at 13,700 per cattle. Okay, so that's the important part, 13,700 Rand per cattle. Okay, so we may need that. So I'm just going to skip right ahead. We may need some more information, but we'll go look for that once we do need it. Okay, so let's just read this half a page for point number 2. Okay, so here we have the abattoir division. So they say the division has a world-class slaughtering facility with a maximum capacity to slaughter 135 cattle per day, and it operates for 7 days a week. The division purchases only Class B cattle from the feedlot division and other feedlots across Southern Africa. Okay, so it buys from internal as well as external. The feedlots deliver the cattle to the abattoir division. The division's slaughtering process is recognized as a joint manufacturing process. Okay, so that's what they're telling you. And the related joint costs are allocated to the joint products based on the constant gross profit percentage method. So they're telling you how it gets allocated. The process simultaneously yields 3 types of products, namely premium cuts, standard cuts, and the offal, whatever it's called. Okay, so you can understand that is probably going to be the byproduct. And they're telling us the offal, whatever it is incidental to the slaughtering process. When you see the word incidental, it means that it is nothing, it is minimal. So that automatically becomes the byproduct. So remember, the byproduct is insignificant relative to the other products. In addition to these products, the slaughtering process results in waste products which have no scrap and or sales value. Okay. So here we go. Okay. So extract from the budget information for the month ending 31 May 2018. So here we have sales less cost of sales. When you see cost of sales, you know it is absorption costing. When you see gross profit, you know it is absorption costing. Then we have less other non-manufacturing costs, which is variable and fixed. Remember, like I explained in video number 1, that with the absorption costing method, above gross profit, we are dealing with manufacturing costs. Below gross profit, we are dealing with non-manufacturing costs. Whereas in the variable costing system, this gross profit is not called gross profit, it's called contribution margin. So above contribution margin, we are interested in variable costs. And below contribution margin, we are interested in fixed costs. Okay, so make sure you can see that distinction. Okay, so our focus is going to be to allocate the joint costs. Okay, so we have to allocate the joint costs using a constant gross profit margin. So they'll have to tell us what is the constant gross profit margin. Okay. Okay, let's just have a look. Okay, so they say the budgeted sales are based on the budgeted purchases and slaughter of 4185. The budgeted sales are based on the budgeted purchases and slaughter of 4185 cattle. Each cattle is 400 kilograms, and the standard output weight per each cattle and the budgeted selling price are as follows. Okay, so here we have output weight. So premium cuts is 160 kilograms, standard cut is 192, whatever that is, offal 44, and waste 0.4. So when you add this up, it should add up to 400. Okay, so I mean, we can add this up. So it doesn't look like it adds up to 400, but okay. 160 plus 192, let me just quickly add up. 160 plus 192 plus 44 equals 396. Okay, so this must be 4 kilograms plus 4 plus 4. Yeah, okay. Okay, so yeah, so that's 4 kilograms. Okay. So they say the budgeted joint costs comprise of 56 million rand of cattle purchasing, and abattoir holding cost relates to abattoir holding cost relates to 2 million relating to the cattle slaughtering process. Okay, so the budget the joint cost is made up of two things: purchase price plus holding cost. So it comes to 58 million rand. So we need to split this 58 million rand between the joint products. The joint products is premium cut and standard cut. Now take note that this is all in kilograms. So we could have allocated based on physical units measurement, but we can't in this question because the policy is constant gross profit. Okay, so if they were silent and they said we must choose, then we can choose physical units measurement because all of them are in kilograms. Okay, but why we can't in this question? Because the policy is constant gross profit. Okay, so they say further processing costs includes the cost of sorting, cleaning, and preparing the products for distribution to the retailers. The products are stored in 3 separate refrigerators, 1 refrigerator per product type. Okay, the division's minimum net profit percentage per each joint product is budgeted to remain at the historical level of 10%. Okay, so that is 10%. But what is gross profit? Oh, okay, we will be able to work it out. Okay, so we'll be able to work out what gross profit needs to be. If net profit must be 10%, we can work backwards to get what gross profit must be. Once we know what is gross profit, we will be able to, once we know what is gross profit, we will be able to work out the missing numbers. Okay, so this is basically filling in the missing number, but you need to understand the process so that you can work out the number. So they didn't tell us what is the constant gross profit margin. We're going to have to figure out what is the constant gross profit margin. Once we figure out what is the constant gross profit margin, then we will be able to work out, to allocate the joint costs. Okay. So let's, it's not answering a specific question. So let's do this. So I'm going to share my screen. Okay, you should be able to see. I just need to get, sorry, whenever I'm tutoring, for some odd reason, my sinus caused me a problem. I just need to get me another tissue. Okay, so I'm back. Okay, so let's just picture what's happening. So picture a cow, so picture a sheep, and it's going through a cutting process, right? So what happens when the sheep or the cow comes out from a cutting process? What comes out? You're gonna get pieces of meat, but the pieces of meat is premium quality, and then I think it was called premium cuts and standard cuts, and then there's gonna be some stuff on leftover, whatever it's called, and that can be sold for a small amount, but it's minimal, and then there's some wastage, and the wastage is also minimal. Okay, so just be aware of that. So just try to picture it, and hopefully that can help with some kind of what a joint process and a joint cost and joint product and byproduct is all about. Now remember, what do we want to do? We want to allocate joint costs. Now, the way you allocate joint costs is as follows. Remember, you're actually not allocating joint costs. You're allocating net joint costs. Okay, so that's important to understand. We allocate net joint costs to the joint products. Okay. Between the joint products. Okay, so we allocate net joint costs between the joint products. Now, what do we mean by net joint costs? Net means something was subtracted from joint costs. So what gets subtracted? We subtract the net proceeds from the byproduct. So what we're going to do to get to know net joint costs, we do the following. We say joint costs. And remember, what is joint cost? It is the cost incurred in the joint process. So joint costs less proceeds, less net proceeds from byproduct. Okay, and this will equal net joint costs. Okay, so this will give us net joint costs. Now we're going to allocate net joint costs between the joint products. Now, what are the joint products? So remember, the joint products are premium cut, and what's the other one? Standard cut. Okay, so we basically, if I so let's stop this. Okay, where's that now? So what you must know that there's going to be a number over here, there's going to be a number over there, and the offal that must be 0. Okay, so under this number it must be 0. So just be aware of that. That for offal, whatever it's called, offal, whatever, that the joint cost amount must be 0, because you don't allocate joint costs to a byproduct. You only allocate joint costs to what now? You only allocate joint costs to you only allocate joint costs to the joint products. Okay, so that's very important to understand. Now let's have a look. What are the joint costs? Okay, so let's first work out what are the joint costs. Okay, I was going to make this right quickly. You can see my screen. Just let me know if you can't. You should be able to see Excel. I mean Google Sheets. So joint and by product. Okay. Okay. Okay, so the joint cost is going to be made up of 56 mil plus what's the other one? 2 mil. Okay, so this is the holding process plus the purchase of the cattle. Okay, so this is equal to 56, 123, 123 plus 2. Okay. Now we're going to work out the net. Okay, so here we go, working one. Okay, so let me just actually, I just want to complete the joint cost so we actually have something more. You don't have to, like in an exam, you can simply do that, okay, because it's a very basic calculation. I'm just going to go extra step and I'm doing a little bit on the longer way so you can just see the thought process going through my mind. But in an exam, you don't have to do working one, you simply just write it is how I have it over there. So the joint cost is basically purchase of cattle, holding costs. Okay, so that was 56, 123, 123, and then 2, 123, 123. Okay, so this gives us a total cost. This gives total joint costs. Okay, so joint costs, which comes to the sum 58 million. Okay, so in an exam, you simply can write it out like that. Okay, but I'm going to just do it a bit of the longer way so you can see the thought process. So remember, in an exam, you don't have to calculate every single thing, but you need to expect most things to be calculated, especially if it's complex. Okay, what's happening here now? Okay, then we will work out net proceeds. Okay, so this is the calculation for the byproduct. Okay, so it's a calculation of the byproduct. So it's going to be sales, cost of sales. What was the other one now? So it is sales, cost of sales, and other non-manufacturing costs. Okay, sales, cost of sales, other non-manufacturing costs. Okay, other non-manufacturing costs. Okay, so if you have a look at this thing over here, the only question mark is sales. Okay, ignore cost of sales, because cost of sales is a sum of this. So it is sales and joint costs. So you can ignore cost of sales, you can ignore gross profit, because cost of sales and gross profit is just basically a sum of something. Okay, it's based on a formula. So the two numbers we need to get is sales and joint costs. But what do we know? That because offal is a byproduct, there won't be any joint costs. Okay, so there won't be any joint costs. So therefore, the only number we need to calculate is sales. But let's quickly get cost of sales. It is 200 plus 130, 400. So it is 200. It is 200K plus 130, 400K. Okay, so it is equal to 200, 123 plus 130, 400. Okay, this was, gonna remember what I saw. That was 6365. 6365. 6365. Okay, so I'm just gonna make a note. No joint costs allocated because offal is a byproduct. Okay, joint costs are only allocated to joint products. Okay, so just take note of that. Now all we need is, and this will give us our net proceeds, net profit, net proceeds, whatever you want to call it. Okay, this is going to be net proceeds. Now we need to just work out sales. What do we know is sales? Sales is 19 Rand 1975. Okay, so sales is 1975. Okay, we know for each cattle offal is 44 kgs out of 400 kgs, so we can work out the percentage. And there was 4185 cattle. Okay, so we can go work that out. And we know the price is 1975. Okay. So basically, we can work out sales. Sales is going to come from working 3. So let's do working 3. Working 3 is basically sales equal kgs times price per kg. Okay, so therefore sales is kgs and then price per kg. Now we know price per kg 19.75. I'm just going to tell you that is given. I mean, you don't have to put all of this given and stuff in, but just so you can see. Okay, now we need to work out the kgs. Okay, so total cattle 4185. Okay, so it is the total number of cattle. Each cattle weighs in kgs 400. Okay, so we know that. Now, what we're going to just say, this is premium cut. This is, so it's premium cut. It is standard cut. It is offal, and it is, what was the other one? Waste. Okay, so this was 4, this was 44, this was, I don't know, 192 and 160. 192 and 160. So if we add up, what do we get? So this should be the 400. We just basically want to work out a percentage. Okay, so for each cattle, premium cut makes up 40%. For each cattle, standard cut makes up 48%. For each cattle, offal makes up for 11%. For each cattle, waste makes up 1%. Okay, so there we go. So now we know, so now we can work out total kgs. So there's 4185 cattle. Each cattle is 400 kgs. So that's the number of total number of kgs. This is kgs per cattle. This is percentage. Okay, now we can get total kgs. So all we can do, we will say 40% times total kgs. And then I can just drag this down. If I must add up everything, should add up. Okay. Are we happy at this point? Do we follow at this point? Yes, no? Alvina, Sergio, Michaela, while I'm just making it.
Yes,
Yes.
I'm with you, but I
Right.
didn't do it that way.
Yeah, no, that doesn't matter how you do it. So we must just make sure we get to the same number. Okay, so
Same
remember,
amount.
yeah,
Okay.
remember a calculation can be done anyway. So it does not matter how you follow it. This is just basically maybe what goes through my mind. If we come to the same number and it makes sense, we come to the same number, then it's okay. There's only certain aspects where you have to follow a certain method. A calculation is one of the stuff you can do however you feel like doing. Okay. So now we have the kgs. So now I have the kgs for offal. So that's the number of kgs for offal, and that's working for. So now I can, so obviously that kgs, you're going to have to show a working. There's no way you can write on the side of your page and then just put in a number. You're going to lose all your marks. Okay, so UNISA, don't mark the final number, you mark your workings. Okay, so it's very important to take note. So not everything. So like this over here is fine. So for example, let me just show you where so you can see where I'm pointing. So this over here is fine like that. Okay, this is a basic calculation. This is not a basic calculation. So you don't write this on the side of your page and you just slot in the number. You'll get 0 because you need some marks, the workings. Okay. So our sales that's the number of kgs we sold, and that is the price we estimate we're going to get. So that is the sales we're getting.
Is
Yeah.
I do get the same amount that you got,
Yeah.
the 36765.
Yeah.
All I did is I took 4185, which was
Yes.
the budgeted number. I times it times 45, and I times it times the 19.75.
Where did you get 45? What 45?
I mean 44, sorry. So
So you said
44 is the kg.
Yeah.
So what I did is I took 4185,
Yeah.
which is the budgeted purchases, times the 44 kgs of
Yeah.
the offal, and I times it times the 19.75, and I got the exact same number.
How would you get the exact same number?
I took 4185, I times it times my 45, I mean my 44, and which I got 884,914. I times that times my 19.75, and I got the 3,636,765.
I'm just trying to see how it doesn't make logical sense. Okay, but we can figure that out another time, but I was trying to see how does that make logical.
Okay, because the logic behind is that they broke up the the 400 already for us, which gave us the 400 kgs, because they said like each cow gives 400 kg. So if you take your 400 kg and you times it times your 4185, then you will get like that
Oh, I see.
1674.
I see what you're saying.
Yeah.
Okay, I see what you're
That
saying.
was my logic behind it. So that's why I just took the 44
Oh, then it's
times the
totally fine.
485.
Yeah. Mathematically, I wouldn't have thought like that. So yeah.
Okay.
So yeah, then it's totally fine. I see your logic and it makes sense now.
Okay.
Yeah.
Okay.
I think another student also told me like that. But yeah, logically doesn't, in my brain doesn't work that way. So, but I see your logic and it makes 100% perfect sense. So that is the, what is this now? Net proceeds. Okay, so if I go plug in net proceeds. So if we compare that minus that. So remember, we allocate net join cost generally. Okay, some companies don't do it, but I think for UNISA purposes, we follow that approach. There's basically two ways you can do it. So this is one of the ways that you can do it. Okay, so so we will follow this way. So now this 55,927,600 needs to be allocated to premium and standard. How much we allocate must ensure that we obtain, we maintain the standard gross profit percentage. That is whatever. They never gave us the standard or the constant gross profit percentage. They never gave it to us. If they gave it to us, it would have been very easy, but they never gave it to us. So therefore, we need to work, we first gonna have to work out what is the constant gross profit. Once we know what is the constant gross profit, then we can do the allocation. So remember, in a constant gross profit scenario, you need to know what is the constant gross profit. If you do, then you do the allocation. Now, in our scenario, we don't know the constant gross profit. We have to work it out. Once we work it out, and then we can do the allocation. Okay, so now we'll have to go work out what is the constant gross profit margin. Now, how you get there, it's all dependent upon the scenario. So let's have a look. Yeah.
Before we go further, I have a question. Your cost of sales, how did you get that 2 million?
Where's the 2 million? This year.
Yeah. No.
I think my cost of sales.
Yep. I don't get that.
Yeah, no, my cost of sales, I probably have extra to 0.
Okay.
Let me just see what's happening here. Oh no, that's right. 200. It's this over here. That must be like that.
Okay. Okay.
Cross quickly. Okay, so there we go. Okay, so what 200 plus 130. Okay, just put in extra. Okay, so that is basically it. Okay, thanks for picking that up. Okay, now we need to get gross profit. Now we need a gross profit percentage. How do we get gross profit percentage? It's gross profit divided by sales. Okay, so gross profit divided by sales times 100 gives us the gross profit percentage. But we don't have gross profit, we don't have sales. So the question is, how are we going to get to this number? Okay, now remember what they said. They said the company must have a constant, each joint product must have a net profit percentage of 10%. Now remember, net profit percentage is net profit divided by sales. So let's have a look what they said somewhere here. Yeah, so net profit before tax to sales must equal 10%. So basically, the thought process is as follows. Okay, we need to allocate what we need to allocate, net joint costs, net joint costs to join products, to joint products using the constant GP method. Okay. In order to do this, we need the constant GP percentage. Okay. In this scenario, we do not have the GP percentage. Therefore, we need to calculate it. Okay, so that is the thinking process. We need to allocate joint costs using the constant method, GP method. So in order to do that, we need the constant GP percentage. In this scenario, however, we don't have it. Therefore, we need to calculate it. Okay. How we calculate it depends on this scenario. How we calculate depends on the scenario. Okay. And okay, so over here, so based on the scenario, we must work backwards. We need to work backwards from net profit. Okay, before tax. Okay, so that's basically what we need to do. So what do we need? Okay, so just take note, what do we need? We need to make sure that net profit is 10%. Okay, so we need to make sure the net profit percentage is 10%. So in this scenario, we need to make sure the net profit percentage is 10%. So if we have details, if we have premium cuts, and if we have, what was the other one? Standard cut, premium cut. So we need a net profit percentage of 10%. Okay, so net profit percentage equals net profit divided by sales. Okay, so we know net profit must be 10%. So in order to get net profit of 10%, we must say NP divided by sales. We don't know what is net profit. We don't know what is sales, but we can work out what is sales. That means because we can work out what is sales, we basically have sales and we have net profit percentage. So we will know what is net profit. Okay, so that's important to understand. So now we know what net profit must be. So we will be able to calculate what net profit must be. So then we will know what GP is. Okay, so let's just have a look. So let me just show you quickly over here. As you can see, in this scenario, we don't know what is sales. We don't know what is cost of sales. We don't know what is joint products. We don't know what is that, and we don't know what is net profit. Okay. In order to get gross profit, we need sales minus cost of sales. We know what we can get sales. In order to get cost of sales, we need to get joint costs. But joint cost is going to be the very last thing we can get because we don't know what is GP percentage. Okay. We don't have net profit, but we can work out net profit using the information that we have. So therefore, we're going to first work out net profit. We're going to have sales. So we can work backwards to get what gross profit needs to be. Once we know what gross profit needs to be, we can get what cost of sales needs to be. When we know what cost of sales needs to be, we're going to know what joint cost needs to be, because joint cost is the only missing piece in the cost of sales calculation. Okay, so just follow that. So I'm gonna do the actual calculation, and then you can let me know if you follow it, and we'll go through the process again. Okay. So what do we know? We need we have NP of 10%. So net profit percentage is 10%. It must be, okay. Okay, so this is given. We can work, we don't have sales, but we can work out sales, okay? And then that means we will be able to work out net profit. So that means we'll be able to work out net profit, okay? So what is sales? So sales, we can go work out. So remember, it's going to do the same formula over here. So I can't remember what was the selling price. So the selling price for premium cuts is 46 Rand, and for standard cuts is 42 Rand 50. So 46, 42 Rand 50. So this here is 46, this here is 42.50. Okay, we know the kgs. The kgs is going to come from whichever working we did that on. So the kgs is going to come from working 4. Kg is going to come from working 4. Okay, so this here is working 4. Now we know sales. So sales is just basically going to be that. So now, because we know sales, we can work out net profit, because net profit is 10% of sales. So now we can work backwards. So let's just have a look how we're going to work backwards. So if we use what they had over there, we can just basically copy this out quickly. So I can use the same thing I did for, can use the exact same format over here. Okay, so this is going to be net profit. So just understand that net sales minus cost of sales minus other non-manufacturing costs will equal net profit. Okay, so remember, net profit equals sales minus cost of sales. You just call it other non-manufacturing costs. We want cost of sales. Okay, so we want cost of sales. So therefore, cost of sales equals sales minus other non-manufacturing costs minus net profit. Okay, so all I'm going to do is I'm going to change this to net. Okay, so just using that formula over there. Now we know what is cost. We know what is sales coming from working 6. We know what is net profit coming from working 5. Oops. And then we know what is other manufacturing costs, because that was given. So other non-manufacturing costs was given to us as 1 million and 1 million. Okay, so therefore cost of sales must equal that minus that minus that. Cost of sales have to equal that. Cost of sales have to equal that. Now we know what cost of sales. We know what is cost of sales. So now we know what is cost of sales. So therefore cost of sales is made up of 3 things, right? But we don't know the one. So we know there's further processing costs. And I don't know what was the other one now. There is refrigerating costs. Refrigerating costs. So that must then equal to joint costs. And that must equal joint costs. Okay, or net joint costs. So therefore, if that equals that, other numbers is 90, 100, okay, 90, 100, 90, 100. What was the other number now? 164 for 520, 164, 520, 164, 520. What was this now? Also 100. So this will tell us, or it should tell us, how to allocate. Let's just hope it gives us the number. So that minus that minus that. That tells us how much of the joint cost should be allocated to premium cut, how much should be allocated to what you call it. Okay. So here is our net joint cost. So what should basically be allocated are these amounts, but now it's not adding up. So I just need to figure out how come it's not adding up. But let's just see quickly. So in order to maintain a constant GP, joint costs should be allocated as follows. Okay, it's not gonna, I'll explain now. So it should be allocated as premium cut needs to equal that, and standard cut needs to equal that. So if the numbers, if we put in those numbers over here and we get the sales as we want, it's going to get to the net profit that we want. And by getting the net profit that we want, it implies that the GP has to be the constant GP that they expect. We don't know what's the constant GP, but it implies that the constant GP has to be in check. The only problem, well, I'll have to go look up, I don't know why that is the case. The only problem that we're having over here at the moment, I don't know the answer to it, I have to look it up, as I said, is if you add this up now, it's not adding up. If you add that up, it adds up to the 50 to 56,000, which is more than the 54. So there's probably going to be some, we have to probably do some, what you call it. So I'm going to leave it at this. I'm going to go read up what do we do when that is the case. What's probably going to have to do, we're probably going to have to, obviously you can't allocate all of this amount. You can't allocate 56 million when there's only 54 million. The standard cost is only 54 million. So that means we can't allocate 56 million. Based on what we followed so far, we are correct. But because 56 million exceeds the actual joint costs, there will obviously have to be a trim down. I just need to figure out, I'll go read up how to do the trim down. Okay, so I'm not going to deal with it now. Once I figure it out and I read up on it, and I'll explain it to you guys. But does that answer the process on joint costs? So like I said, constant GP is generally the most challenging when the Harley comes in, happen to come in over here, because it's such a mission to go through. But that's basically the thought process behind it. Is there any questions from your side, Alvina, Michaela, Sergio?
I'm all good.
Michaela?
No questions my side, thank you.
I'm fine, thank you, Faiz.
What did you get me, Alvina?
Look, I know, I just work backwards and I get exactly for my joint cost, the joint cost like what you got, like the 26,466,920.
Okay.
Yeah.
So there's obviously something that, so I just need to have a look at, but you can't allocate more than the actual costs, okay, or the budgeted costs.
Yeah.
So there's something we need to, I'll just go read Drury textbook and then see what happens in that case, okay, and then so I can't think of it right now, but I'll get back to you guys. But that's the thought process, okay. In the other joint cost video from semester 1, it's a different question. It's not the constant gross profit. I think it's a physical units one, so you can have a look through that and then you can see how to do it from a physical units. Just make sure before you get stuck in the detail, because as you can see, it's very, very easy to get stuck in the detail, okay? You need to train yourself to when you do get stuck in the detail, to just stop and take a step back and then ask yourself, what am I trying to achieve? Because why it's important to train yourself to think like that? You need to remember you're going to be writing an exam. In an exam, it's the pressure, it's the time, it is all of those type of stuff. So without exam situation, you can get stuck in the detail. Just imagine within exam situation, you will get even more stuck in the detail and even get quicker stuck in the detail because there's so many other pressures on you. So to train yourself to handle a situation like that, when you do get stuck in a detail while you are practicing, learn to stop and train your brain to ask the question, what am I trying to achieve, so that you know where you're working towards, and you're not just doing calculation upon calculation. Okay, so it's very important in a question like this, and like, for example, in a standard costing question, there's so many calculations can happen in a standard costing question that you're going to have to remind yourself. So you want to train yourself to think that way, so that you are so used to it that while you are doing a calculation, your brain is going to trigger it. So while you're doing a calculation, your brain will trigger, what am I trying to achieve? And it will answer it for him. Your brain will answer it itself while you are doing it. But while it is not trained to think in that manner, you need to stop and tell yourself, what am I trying to achieve? So, and then let your brain train to think like that, so that when you come to a point, so for example, like for me now, while I am doing a calculation, in the back of my mind, I'm constantly reminding myself what I am trying to achieve. But it came years of practice, right? So for you, it's easy, because I was one of those students. You may be different. I was one of those students that I would get lost in the detail. But in order to make sure that you don't get lost in the detail, you need to constantly remind yourself what you're trying to achieve. What am I trying to do? So that it also acts as a mechanism to ensure you're remaining on the right track. Okay, so don't underestimate these small differences. So some people think I just talk a lot of nonsense, but it is these small differences that makes a significant impact. I had a few students from CTA actually telling me that these small things that I've been telling them, that some of them implemented, mainly females. Females are generally more diligent than us males. I'm not being sexist, but it's sometimes a little bit true. So there was a few of these of one of the females that was in the CTA class that said they've actually implemented some of the things, and it impacted them to write an exam better, to actually finish an exam when they weren't used to finishing an exam. So it's these small things do help. So as you practice, but you cannot do it on the day of the exam for the first time. It's not going to work. So as you practice, there's two things you need to make sure. The one thing is to actually learn what you're learning and be able to answer the question. The second thing is to train yourself how to think. Training yourself how to think is probably the most important aspect, because you don't know what you're going to get in the exam. So please make sure you do it. And the beauty of it is, the beauty of it is that it's not only applicable to MAC, it is applicable to any subject, no matter what subject, no matter which qualification you are doing, because it's training your brain to think. It's not training you to answer a MAC question. Okay, so just be aware of that. So that's all from my side. If you have any questions, then let me know. Please make sure that you are practicing. But what is today? Today is, what is today? Today is
Wednesday.
Oh, so this is yeah. So this is the second class of the week, right? So I'll see you guys on Monday. So yeah, am I right? Yes. So I'll see you guys on Monday. On Monday we are covering. Let me show you. On Monday we are covering standard costing. Okay. So on Monday we are covering standard costing.
Ace, I have something to ask you.
Yeah.
Say for instance, like we now worked out the net profit based on what the division minimum net profit percentage is. Can't, but that is just the joint products. Okay, so it's fine. Now I just saw now in the scenario, it's just for each joint product.
Yeah, for each joint
and
product.
yeah, so it doesn't apply to the byproduct.
Yeah, so what may happen is, because we need to, so I just want to confirm, I didn't want to tell you, I first want to confirm with, but I want to say one thing, I'm not 100% certain, I have to change the answer again. So what will most likely happen, but like I said, I first want to confirm with, what's his name, Drury. Where is this now? So here you can see we have to allocate this based on our calculation. What is limited to 54. So what we're probably going to have to do, we're going to have to limit this 56 million to the 54. And the difference, the difference will go against the the byproduct. So what we're going to have to do, this extra amount is whatever it is, this 56 minus 54, that 1.2 will most likely have to be allocated to the byproduct in order to maintain the joint products at 10%. The only question now is how much of this 1.2 do we allocate between the two products? So that is basically, but I first want to confirm. I don't want to just say stuff and then I have to change it again. So, but that's basically, that's most likely what's going to happen if I just think about general management accounting principles. Okay.
Okay.
Okay. Any other questions? We all good? We all good? And then we are good to go. Okay. So please make sure you practice, like watch the other videos, week 1, week 2, week 3. I'll upload class 2 and class 3 tomorrow. Then you have all 3 for this semester so far. But there's also other videos of the previous semester. I've also uploaded the videos, the question papers that you can practice. So here you can see, you should be able to see the screen. There you can see this is the folder you have access to. Here is how many question papers? It's quite a bit. 1, 2, 3, 4, 5, 6. You don't have to do all 6. Take the question papers, look through it, see which items it have, and then you kind of slot it in your plan over here, like I kind of did over here. Slot in, here's the key topics, slot in which paper have the topic, and then try to do between 3 and 5 for each topic. You will realize that you probably only have to do 3 exam papers or 4 exam papers and not 100 exam papers. Then once you're done with all the 3 to 5 questions per topic, you then ask yourself, what are you still uncertain about? Remember, if you're doing 5 and you're still uncertain, then there's not a problem with the number of questions you're doing. There's obviously a problem fundamentally. So then try to figure out what the problem is. And if you still have a problem, remember, you can contact me. I have that 15, 20-minute one-to-one sessions that you can ask me specific questions and we can try to iron out all of those type of issues. Okay. So don't try to do all 100 questions, but try to at least do 3 to 5 per topic. Okay. And then also make sure that you are doing 1 full exam paper from start to finish under time. Okay, that's very important. Okay, guys, I'll see you. Bye-bye.
Bye.